Hello, everybody. This is Alan Ellman, the Blue Collar Investor, welcoming you to this BCI podcast number 71, titled Dividend Yield Should Be a Secondary Factor When Selecting Stocks for Our Covered Call Writing Portfolio. We're going to use a real-life example with MPLX LP, which trades on the New York Stock Exchange under the ticker symbol MPLX. Over the years, many members of the BCI community have asked me about using dividend yield to select stocks for our covered call writing portfolios. The thinking goes that not only can we capture option premium, but we can also capture dividend yield. Now, there is a way of doing this, of incorporating dividends into our strategy, but is it the best path to select the stocks with the highest dividend yield and then write covered calls against those securities? This podcast will address this issue. Okay, so what we're going to do is first talk about the BCI screening considerations regarding the stocks or ETFs that we use. Now, in the BCI methodology, we actually have a three-pronged approach to screening for the best and most eligible securities for covered call writing, and in fact, for selling cash secured puts as well. It's the same list. We first do a fundamental analysis, sales and earnings growth. So why is this so important? Well, the reason is that the institutional investors love companies that have strong fundamentals. Now, I'm talking about mutual funds, hedge funds, banks, insurance companies, the big boys, the ones that move the markets, not retail investors like ourselves. So we first start with a list of elite performing securities from a fundamental perspective. Then we look at a price chart and we look for trend and momentum. And we want bullish or at least mixed chart technicals for stocks like these with great fundamentals to keep in consideration. And finally, what I call common sense principles or factors that don't fall within fundamental and technical parameters. Things like avoiding earnings reports, minimum trading volume, asset allocation, diversification, things along those lines. And that's how we end up with a list of eligible securities for option selling. The question becomes, should we screen based on dividend yield? Okay, so now we're going to go back when a member of the BCI community contacted me about MPLX, which actually had an annual dividend yield in October of 2019 of 9.53%. I got this information from www.dividendinvestor.com, and that gives information on dividend yield, ex-dividend dates, and a lot more related to dividends, and that's the free resource we use when we're screening stocks for our premium member reports relating to dividends. So 9.53, can you imagine how enticing that is? That's without the option premium. For members of the BCI community to select stocks like this and then get an even higher return by adding in covered call premium. However, let's look at a comparison chart of MPLX with the S&P 500 over the last 1 year at the time that this dividend yield was almost 10%. And if we looked at a comparison chart, we would see that in that time frame, the S&P 500 was flattish, up 0.6%. But MPLX was down 19.7%. So the S&P actually outperformed the security by 20% over the last year. So then how effective is that 10% dividend yield if the price of the stock is going to decline 20% less than the overall market? And one of the reasons why the dividend yield was so high is because the price of the stock was getting lower and lower and lower. So as the denominator gets smaller, then the yield gets larger. So it's actually good news, bad news situation, mostly bad news. So I think you could understand from this perspective, if you had an opportunity to get a 10% dividend yield on a stock that's going to underperform the market by 20%, you would pass on that. So it's important to understand that dividend yield should not be the overriding factor when selecting securities for our covered call writing or put selling portfolios. Let me summarize. Covered call writing is a great strategy that generates a monthly or weekly cash flow from option premium. I've been using this for more than 2 decades, beating the market every single year. It's a wonderful strategy. But the quality of the underlying security is critical to our overall success. That's why we must focus like a laser on the 3-pronged approach to screening for eligible candidates for covered call writing. If we use dividend yield, that will cause us to lose focus on the main important screening factors: fundamental analysis, technical analysis, and common sense principles. Now, one way to include dividend yield into our portfolio in a much safer manner would be to use the best performing select sector spiders, which break up the S&P 500 into 11 different categories. So if you selected, for example, the top 3, you would now own, in essence, 27% of the entire S&P 500 and the top 27% performing at that point in time. You can also make selections from the best performing Dow 30 stocks. In our premium reports, we select Dow 30 stocks that have outperformed the S&P in both 1 and 3 month timeframes. Those would be outstanding candidates. And all of the Dow 30 stocks, with the exception of Salesforce, do have a dividend yield. Not 10%, but a dividend yield nonetheless, which we can then incorporate into our covered call writing strategy. Now, our premium stock reports also will show stocks that offer dividend, but that should not be the main or sole criteria for selecting stocks for our option selling portfolios at any given point in time. So overall, I do consider dividend yield icing on the cake, and certainly not a primary consideration in our security selection for our covered call writing portfolios. The option premium is so much more important, and the success of our trades is contingent on the quality of the underlying security as opposed to its dividend yield. I want to remind everybody that we have a myriad of free resources on the bluecollarinvestor.com website, www.thebluecollarinvestor.com. In particular, look for that free resources link, including the Ellman calculator, which you can click on that, put in your email address, and you can download the calculator along with the single column put calculator and many other free files that will enhance the level of your covered call writing and put selling success. We also have a free beginner's tutorial, a glossary for covered call writing, and many, many more free resources on the website. If you go to the blog link of our website, you could sign up for our free newsletter, which I write an article every week. I spend hours writing these articles. They all have important educational information in them. In the bluecollarinvestor.com store, we have a myriad of online videos which can be purchased individually or bundled, along with same thing with calculators, about a dozen of them, which you can get individually or bundled. Our books are available in ebook, softcover, and a couple in hardcover format. And we also have the trade planner and online mentoring programs as well. Feel free to take advantage of all of our free resources and educational products on the bluecollarinvestor.com website. Ladies and gentlemen, I want to thank you so much for taking the time to listen to and in some cases watch this podcast, BCI podcast number 71. Dividend yield should be a secondary factor when selecting stocks for our covered call writing portfolio. Folks, I hope you enjoyed this podcast, and most importantly, I hope it puts some cash in your pockets. As always, this is Alan Ellman, the Blue Collar Investor. Take care, everybody.